for people that are not interested, that are not familiar with you, you started, you were, I don't know every in and out of your career, but you were quote unquote traditional. You were you're a hedge fund manager. You've worked with the Pentagon. You've worked with the CIA. What made you jump on, and I call it facetiously, the crazy train? You went from you were a lot more traditional, and now you're talking about things that no one wants to talk about. What brought you to this position right now in your outlook and your interests in studying the economy? And did you always know this stuff, but you played a little bit more of the mainstream Wall Street game, but you always knew this? Or what brought you to this different type of way you're looking at things?
Yeah, I kind of always knew it, and I can explain why. I would say that if you looked at my resume, I don't even do a resume anymore, but if I had one, you'd look at the jobs and you say those are pretty traditional jobs, and they were. But I don't think I was ever a traditional thinker. That's two different things. So yeah, I was International Tax Counsel to Citibank for 10 years. I was general counsel of one of the biggest government bond dealers for 10 years. I worked in a hedge fund for 6 years from start to finish, long-term capital management that almost, destroyed the world in 1998. I was not the risk manager. I'm glad to say I was a lawyer, but I negotiated the bailout of Wall Street banks that put $4 trillion in to support the balance sheet. I ran a stock exchange. I worked at another couple other big hedge funds. The CIA thing was different because that was after 9/11.
Okay.
There was insider trading before the attack, and they were looking for financial and derivatives and options experts to help them understand that and build a machine that could predict the next 9/11. And I was one of the ones that was tapped to help that, and I was there for over 10 years. So yeah, a lot of, CIA is a little out of the box, Pentagon, but a lot of, banks, hedge funds, exchanges, government jobs, kind of traditional in that sense. But going back to when I was, 9 years old about 9 years old, my father fought in World War II. He was in the 1st Marine Division, 1st Regiment, and they fought some pretty tough battles. But after the war was over, he was part of the occupation of China. The U.S. went in to occupy China because China was a mess, and we were supporting the nationalist government against the communists. But when I was a little kid, he would say, yeah, my buddies and I, when we had to wanted a case of beer, we had to take a wheelbarrow full of Chinese yuan down, all the notes we could carry and more, to get a case of beer. And a lot of people, they've heard of the Weimar inflation of 1922, and that was a big deal, and they had wheelbarrows full of money. That
the other book, I read that recently on When Money Destroys Nations, about the Zimbabwe collapse.
I haven't read that book, but that would be another good example. There are many examples of that. But what's different about Zimbabwe is that it still is a developing economy, not a developed economy. Germany was a very developed economy.
Fair enough, yeah.
Maybe, I think, first or second largest economy in the world, with a highly educated population, a large industrial base, and they got into the hyperinflation. So a lot of people have heard of that, but I first heard about it in China. And it turns out that Chinese 1946 hyperinflation in China was worse than Weimar. And there have been many other examples. So I kind of grew up as a 9-year-old hearing about wild inflation stories from my father, who was a really smart guy, but not an economist. But he, when you need a wheelbarrow to buy a case of beer, there's something wrong with the money. Yeah. But he used to, he would reach in his wallet and he'd pull out a $20 bill. But he had another $20 bill that he carried around that was much older. And the old one said, if you read the top, where I went to law school, the first thing they teach you is read the contract, right? Well, a dollar bill or a $20 bill is a paper contract between you and the United States government. They're saying, here's the money, and if you're interested in what it is, read the dollar bill, read the bill. Well, it says on the new ones, it says Federal Reserve note. Well, where I went to law school, a note is a liability. And indeed, money, what people call money, you would consider it an asset, or I would consider it an asset. But from the government's point of view, it's a liability. You go look at the balance sheet of the Federal Reserve System. It's publicly available online. Money is a liability. It's the stuff that they print that they owe to you. For you, it's an asset, or for me, it's an asset. So first of all, what we call money in my opinion, isn't really money. It's a liability of an
And this is
insolvent.
why we have Kiyosaki going like this all the time, that
Yeah,
savers are losers, right?
exactly. He that's right. But what we call money is really a liability of the Federal Reserve System, which is on a lot of occasions insolvent. They have no capital. I had dinner once. It was in Vail, Colorado, as a private dinner, small group, 6 or 7 people at the table, with one of the governors of the Federal Reserve System, and I said to her, it was after a glass of wine. I said, you work for an insolvent bank, and she said, no, we're not. We're not insolvent. No one has done that math. I said, well, I've done it. I think others have done it. You're insolvent on a mark-to-market basis. They don't keep their books on a mark-to-market basis. But mark-to-market just means if you took everything, marked it down to today's value, they were broke.
Okay.
And so then I said, yes, you are. And she said, wow. She kind of harumphed and said, central banks don't need capital. Well, think about that. I think that might come as news to most Americans that our central bank has no capital, or on a mark-to-market basis is insolvent, and that's true. But but money, so-called, is a liability. But then my father had this other $20 bill, and it said silver certificate. And it was from a time prior to the 1930s when you could take it down to the bank and they would give you silver.
That's cool. Do you still have that dollar bill?
I don't have that one. I have a $100 bill from 1933 stashed away somewhere. But when they said silver certificate, what they meant was the bill, the $20 bill or $10 bill, whatever it was really like a warehouse receipt. And there was supposed to be some silver or gold in a vault somewhere. And you were walking around with this paper, but you could take it down and get that much silver. And at the time, it was an ounce of silver, but it was real silver. If you have a quarter or a dime in your pocket, it looks silver. It's not. It's like zinc and coated with aluminum or something. When I was a kid, when you had a quarter, it was a quarter of an ounce of pure silver, and that's what it meant. So I kind of grew up with this notion. My father would say the money's not backed by anything, and he was right. And American money reminded him of the Chinese money that he had bumped into in 1946 when you couldn't buy a case of beer with less than a wheelbarrow full. So that instinct that money is, it's a very hard concept to define. People don't know what it is. They think they do, but they don't really. It's all based on confidence. Confidence is very fragile. It can be lost and destroyed, and it's impossible to recover. So that's why certain kinds of money, they're money one day, and then you wake up the next day and it's like, get me out of here. It's like a house on fire. You just want to get outside. Well, it's happened time and time again throughout history. We're not at that point with the US dollar, but we seem to be pushing the envelope. We seem to be saying, well, how far can we take this? This is playing out.
What made you go from, someone, especially people that are very outside of the box, will say, if you spend, which I'm sure you've heard many times, people will say that really you're just part of the same elitist industry, right? And so you were very much involved in it, but now you're not. And my question is, what made you want to go on something where you probably had so much less resistance to something now where people really outside of the box say you're a shill for the elitists, and then the people inside the box say Rickard's gone crazy? What made you take this transition into something that made you much more of a target on both sides of the fence?
Yeah, again, just kind of going back to, so let's just take a little digress a little bit to 1974. 1974, I got a graduate degree in international economics. That was the year I graduated. That happens to be the last class in which gold was ever taught as a monetary asset. I tell people, if you're younger than I am and you know anything about gold, you either went to mining college or you're self-taught, because the universities just stopped teaching it. They don't teach it. They don't even teach it in an economic history class. But Nixon went off. People say Nixon went off the gold standard in 1971. That's not exactly right. What he did was he suspended the convertibility of dollars into gold. So if you were a trading partner of the United States, Netherlands, Italy, France, whoever, and you ran a surplus, you could take those dollars and you could buy treasury bills, but you could take them to the treasury, and the treasury would have to give you gold. It was convertible into gold at $35 an ounce. That's what Nixon suspended. He said, sorry, we're not converting anymore. He didn't intend the end of the gold standard. In fact, there were a handful of people at Camp David that weekend. It was August 15th, 1971. It was a Sunday evening. Nixon interrupted the #1 TV show in America, which was Bonanza, to give this speech, announcing this. And the gold thing was like the third thing on the list. He was imposing wage and price controls on the entire economy, and then he finally got around and said, "Oh, by the way, I'm suspending the convertibility of gold." But I spoke to two of the people who were there, who were with him. Paul Volcker was one of them, and the other fellow was the dean of the later dean of the University of Chicago Law School, who was a lawyer for the Treasury at the time. And I spoke to both of those individuals, and they told me that they thought it was temporary, that it was sort of a timeout. We're not going to convert to gold, but that's only to give us enough time to have another international monetary conference like Bretton Woods, change the rules of the game, devalue the dollar, and then go back to the gold standard at the new valuation. Now, none of that ever happened. They did have a conference. They couldn't agree on gold. Under the influence of Milton Friedman, one by one, people were going to floating exchange rates. And finally, Nixon just said, fine, whatever, let's do float. But then he got caught up in impeachment hearings, and then he had to resign, and then Gerald Ford comes in, and there was a lot else going on at the time. But the point being, they didn't think it was the end of the gold standard. So it took about 3 years for what I just described to play out. So as late as 1974, I still had to, when I was learning about the International Monetary Fund, I used to still sit down with a national balance sheet and look at gold reserves and think of it as money. That ended abruptly in 1974. Okay. We now have 2 generations of scholars and students who have not been taught a thing about gold. The mainstream economists disparage it. They say it's a joke. Barbarous relic. Keynes never said that, by the way. And I wrote a whole book on this called The New Case for Gold. Right. But so between being a 9-year-old and having your father tell you that there's a difference between a silver certificate and a note, talking about inflation in China in 1946, then going to graduate school and actually learning gold, I just had this legacy that I carried forward. Okay. Now, did I have establishment jobs? Yes. But I would say that I never quite thought like the establishment. I always had doubts about this. I always wondered what happened to gold. I mean, I knew what happened to it, but why it was abandoned the way it was. So rather than thinking that I had this very establishment career and I suddenly went rogue, that's not true. It was more the case that I was always a little out of the box, but I study the system from the inside. When you're general counsel of the world's biggest bank and you're general counsel of one of the world's biggest government bond dealers, and you're running a stock exchange, and you're working for the CIA, and you're working for the Pentagon, and I've been in the boardroom at the Federal Reserve, and I've met a lot of these officials, and I've spoken to them one-on-one, including the head of the IMF. When that's your experience, you know as much about the system or more about the system than anybody. So I have the benefit of inside experience and understanding the architecture and the plumbing of the system on the one hand, with a heterodox view of what money is on the other. So that's who I am, and that's kind of where I am.